Welcome, everybody. Today, we're talking about how to build your own bank, kind of step by step, and kind of why, right? Why are we building our bank, right? I remember, again, just to kind of recap how my kind of awakening and everything happened, but I grew up very poor and didn't understand why we didn't have any money. Why do you not have money? Do you not understand? Why do you have these crummy jobs? My adopted father drove a trash truck, and my adopted mother was a laborer in a casket factory. Why aren't you a doctor? Why aren't you an attorney or somebody, respected and well paid? Well, uh, they would have told you they weren't because they didn't have education, right? I think my adopted mother went only through the fourth grade, if you believe that or not, and my adopted father through the ninth grade. So uneducated. They would tell you that. That's why. But we know lots of uneducated people that are very successful. But doing it through saving money, because then you got to earn more money to save money to then give it to Wall Street and the banks and everybody else, right? Well, my whole thing where I figured out that that was a bad idea, regardless of how much money you made, was after 15 years of being a money babysitter or a financial planner. I analyzed my clients' actual rate of return versus their average rate of return. And I found out that it was less than half. The actual rate of return was less than half of what they were being told their rate of return was, because they were being told average. Okay, that's not what this talk is about, but average versus actual is a real thing. So once I realized that that couldn't be the answer because your actual rate of return is less than half, and that's before inflation, because calculating true inflation into those numbers is really tough. So I just left it out. But it went from like 9.38% is what they said they were making to 4%, a little bit over 4. So I said, there's got to be a better way. So I looked at all of my clients and I found that the clients that really had serious money came down to two things. It was owning businesses and real estate. That was it. Yep. There were guys that were doing oil and gas and things like that, but they were running those businesses, right? Excuse me. So I had to find a different way. And that's when I met R. Nelson Nash, and Nelson became a mentor, a friend, somebody that I admire, one of the best people that I've met in my life, and one of the people that I'm most grateful for meeting and having that time with him before he graduated a few years ago. And one of the things that he would tell me is, why do banks want to control your money? Right now, so remember our freedom formula: other people's money, other people's time equals freedom. So the bank wants to be free to make money, and they use your money and the time that it took you to earn that money, and then they give it to somebody else and they charge them a big interest and pay you a little interest, right? And we know from the examples that we've seen in the courses on Create Tailwind Community that in 2016, so yeah, 9 years ago, but things are cyclical, so I could update it. It'd be still a huge number, but back then it was 2,600%. The bank was paying you 0.2% on your deposit, and they were charging an average of 5.2% to the consumer for interest. And by the way, when I would use that example before, everybody would say that interest is too high. And now people would say it's too low. That's my point, is it doesn't matter what year I take. I could do it every single year. And people, it doesn't matter. Okay. The bank is charging people big interest and paying you a little interest to use your money. So the reason that they want to do that is it's profitable. That's 2,600%. So in that example, you go down and you deposit money at the bank, and the bank takes your money and they loan it out to somebody else for 26 times what they're paying you. That's a 2,600% return. They'll do that all day long, right? Okay. Is that worth taking that back? Yeah, because the problem is that if you have money deposited at any bank and you have money borrowed at any bank, then they're taking your money, making 2,600% more than you with your money from you. Now, nobody would do that if they explained it like that. So that core concept is owning and controlling your cash flow. Your banking is the most important thing that you can do to create true wealth and freedom. So the problem is they rob you of this control and they convince you to put your money in there. Lots of advertising for banks, right? Then you have that interest lost, you have that interest paid, that hidden fees, opportunity costs, all of those things. So if we can just take that back, then we're going to have more money just by that. Forget about what we're going to do with our banking system, but we just paid for those things, our cars, those kinds of things, our credit cards, whatever we pay for those things, being the bank, we're going to earn more money. But we know, if you've been on this call and you've gone through the stuff on Create Tailwind Community, is that where the real magic happens is when we start buying cash flowing assets. Okay, so we know the problem. So if we take back control, which means truly control your money, you have this money sitting in this insurance contract because it's there growing tax-free every single day, guaranteed. The insurance company has to give you a loan, a favorable loan, interest only, not amortized, low interest. Right now, it's either 4 or 5.2%, somewhere in that range, right? And you control how you pay it back, or if you pay it back. Well, so everybody always asks, well, what if you don't pay it back? Comes off of your death benefit when you graduate. So the reason that that's so important is we have liquidity, control, we have guaranteed growth, and we have, which means nobody can tell us that we can't have that money. No one. So the right financial instruments are all that really then matters. Like, what are we going to go put the money in? Is it going to be mobile home parks? Is it going to be multifamily? Is it going to be storage? Is it going to be hard money lending? Is it going to be oil and gas? What are the other benefits that we get from that? Because if we choose the right financial vehicle to put the money in, we could get tax breaks. We could get guaranteed growth. We can make sure that the collateral, that if we were doing hard money lending, was better than the loan, right? Excuse me. We're in control to make those decisions. Now, what does the bank, government, and the banks, the government, and Wall Street want to tell you? You're not smart enough to make those decisions. Just let us have your money. We'll go lend it to somebody else. We're willing to pay you for the use of your money, but not, it's a scam, okay? So we have to maximize the control of our cash flow. So how efficiently can you access and deploy your funds, right? I can get my money anytime I want within a day, 2 days, just normal. If I needed it today, maybe not today now at noon Eastern, but if I needed it at 8 o'clock or by the end of the day and I did it at 8 o'clock this morning, I probably could get that money. Okay. Now I'm going to pay myself interest, and I'm going to take that somebody else's money, the bank or the insurance company's money, and I'm going to go invest it in cash flowing assets or businesses, things that are going to grow, whatever it is. But mostly I would tell you cash flow. Okay. So a few years ago, Nick and I and one of the other guys here at Financial that was with Create Tailwind, we bought, I think it was 13 properties in Tennessee. And we did seller financing. And the guy that did the seller financing, the guy that we bought the properties from, he had just gone through a divorce and he had to pay his ex-wife a certain amount of money per month. So all he wanted from these properties, because he had a lot of other assets, was he wanted those properties to pay his ex-wife. So we negotiated an 18.75 years. Why 18.75 years? Because that gave him the dollar amount every month, interest free. Think about that, interest free. And we paid him that every month, right? We sold one of the properties to make the down payment, but we had to have the money to close the deal, to then recover the down payment, to pay the insurance company back. And so once we did that, how much money do we have in the investment? Zero. And I think we made over 3 years, everybody made a few $100,000, right? And you say, well, yeah, I can't retire on a few $100,000. Okay, that's just one deal. That's why you do a deal and do a deal. And we probably sold too soon because I'm sure the stuff in Tennessee is still going up. But my point is that we didn't have anything in it. We didn't have any risk in it, and we controlled it. So that's just one real estate deal. That's interest that if we would have had to go to the bank, borrow the money for the down payment to pay for this or finance the whole thing through the bank, it would not have cash flowed the way that it did. Okay. It made money from day one, a little bit, but then it grew. And then we sold it once it went up considerably. And that's what always happens, by the way. It's not a bad thing. It's just, I remember buying some houses down in Naples Park, down in North Naples, and the average was like $180,000 per house. Those houses are $700,000, but I sold them at like $300,000, $350,000 because on average, I doubled my money. And I thought, well, I doubled my money. I should but you know what those things, there was no Airbnb back then. You know what those things would be renting for and cash flowing and double, triple in value, which means what could I have done? I could have gone to the bank and borrowed out the equity and went and bought more. But who makes those decisions? Well, I would have. Who had control? Well, I have control. So there's no time where you do the traditional planning where you have control. The bank always has control. They would not do it if they didn't have control, right? You ever try to have a bank have second position on a property or something for collateral? Good luck. The bank wants to be first position, right? And they want to control it. So how do we do all of this? Well, first, we have to recognize that we have a problem. Second, we have to realize that the banking function is way more important than the investment function, like 401, like anything like that. It's the banking function. What you're going to pay in interest is thousands and thousands and thousands of dollars over your lifetime. So if we can recapture that, well, then we've made a lot of money, right? And if we can, while we're recapturing that and we're building this banking system, we can evolve into going and buying cash flowing assets. Okay. If we can shift that and start acting like the owner of a business when it comes to our personal lives, well, then we can make serious, and I mean serious money. And it just adds up. And it's just like that compounding effect. It's the same thing. You know, I always like to equate things to health and getting in shape, etc. And I watch, I don't weigh in all the time, but I weigh on Sundays, right? And I just look at my body composition. And I go to the gym and they have this machine, and they let you use it for free if you're like this certain level of membership, which by the way is $25 a month. And they let you use this machine, and it tells you your, and I don't know how accurate it is. It doesn't, I don't want to say it doesn't matter, but I have a baseline, right? Because I'm going to use the same machine every month. And so I go and I weigh on Sundays because Sundays are the slowest day at the gym. And so I watch, and they give you this like chart. It's on an app that it shows you what's happening. And it didn't happen overnight. It was that compounding effect. I gained a little bit of muscle. Gosh, I felt strong today. Like, what's my muscle? I gained a tenth of a pound. I gained a half a pound. Whatever the month happens, then you adjust, right? You adjust your behavior. You adjust what you're eating, how you're working out, how you're recovering, how you're controlling cortisol, all of that stuff. And then you go, here, now I'm really in this sweet spot. And it's just like building wealth, because you'll go like 3 months, you like look like you just transformed because you just had a great 3 months. And then you'll hit a plateau. And this is where most people quit, both in building wealth and in building health. But it's a journey. And you know, Mike Tyson would say you have to really love to do the crap that gets you ready to fight. You have to like it. And you have to like going to the gym. You have to like deciding to eat healthy most of the time, right? You have to, but you don't just go from eating pizza at McDonald's and whatever every day to eating 100% clean. I'm not sure anybody eats 100% clean, but you don't go from McDonald's and all of that to 50% clean. Just go a little bit, and then a little bit, and then a little bit. And then you turn around and you measure your progress, how far you've come, and you go, oh my gosh, like I've come a long way. And then you feel confident, right? That builds confidence that you can keep doing it. Your wealth is the same thing. Go get one deal. Just get one deal. Finding the deal is the hardest thing. Making the decision to get in shape is the hardest thing. Once you do it, then it's a journey. Like, okay, what supplements should I be taking? How much protein do I need? What protein shakes do I like? What real food stuff do I eat that I can make easy? All of that, right? Like that's the journey. It's like a puzzle. You're figuring out the puzzle. Then when the puzzle starts to come together, you go, oh my gosh, this puzzle is beautiful. I just need to fill in some of these pieces and then some of these pieces. But our lives are kind of like a puzzle that never is complete, right? But just think of that same thing. Health and wealth go together. Both of them are journeys. Both of them are not going to happen overnight. And you're probably not going to hit the lotto. And you're probably not going to find some magic pill or shot that's going to be perfect. You know, there's no shot that I do that decreases my body fat overnight and increases my muscle mass. And I go, wow, perfect. All I needed was that shot every week. Okay. If life was like that, if God designed our lives to be like that, then how rewarding would our lives be? It really wouldn't. It's progress, and making that progress is what's so important to us. So when we think of wealth and health, all of it is designed to be like that, right? And everything is in order with God. So if we do the things that we're supposed to do, and we take these little baby steps, everything kind of goes together. Like it's math, right? I mean, God's an engineer, right? I mean, look at the Fibonacci sequence. If you're not familiar with that, but it's like, it's math And you could apply Fibonacci sequence to the galaxies, to a sunflower. There's a mathematical formula, and it's like, I'm going to butcher this. Okay. So if there's any math people out there, it's like 1, 1, 2, 2, 8, something, something, something. It's a formula, right, of pattern. So God's an engineer. So that means our bodies are designed like that, which also money. And when people like to say manifesting money, I believe that we don't manifest things, God manifests things. And so we can manifest things through God, but we're not God. But it's that gradual progression, patience, run the race like you're trying to, like, you're going to win the race. And so if you're looking at where you are now, just get an accurate picture. We can help you do that too. And there's tools coming from the book. Gotta make sure that I'm okay. There we go. I was reading on the other thing, but there's tools in the book, or there's links to tools in the book. And by the way, like one of the first things, like here's you can see this, or maybe like it says, download this here. No QR code. Trust me, there will be a QR code. That's one of the revisions that I came up with, is let's put a QR code in there. As you're building this, right, and you're making that shift, it's books like this that are going to help you make that shift. And that's the only purpose that I wrote this book. Okay, so now I'm going to go back and answer some of the questions and see if we got questions. All right, so Angela says, been listening to your podcast on taxes. What's the best way to track someone down that understands cost segregation and depreciation for a person that is smaller estate? We have a couple of people, Angela, and I'll have Nick get you their contact information. What they do is they'll do a cost segregation study. And, here's a broad explanation of it, okay, is they're going to just kind of look at all of the equipment, the life expectancy of the equipment, and under a certain amount of years, 20 years, whatever it is, then they can accelerate all of that depreciation. So you don't have to do it over a bunch of years. They're going to charge you a few $1,000s for that. And then you'll have the cost segregation study and take all of that off your taxes. Okay. So that's a great question. Anything worth having is going to be work. Okay, Diana, how much money do you need to open up your own bank? Can a 401k to be used to open up your bank? Love this question. Okay. So number one is, I've seen people start their bank with a few $1,000s a year, right? If you were going to start a bank, you would rather it be a big bank. But guess what? Just like if you were 400 pounds and you wanted to get to 200 pounds, you start where you start. If you have like a limited amount of money at the start, you're just starting, because it'll get bigger. You're going to lose weight. Right. And it's just, yeah, thank you, Angela, for sharing. Is you start small and you get bigger and bigger and bigger. Angela's done that, okay, without sharing her information, but her bank is getting bigger. And so you can use your 401k. And here's the thing. If you use your 401k, how do you not pay the tax plus the 10% penalty? Now, you could just pay it. But what we were just talking about, Diana, is how you do it. Is if you went and bought something that you can depreciate or has tax benefits. Now, it could be real estate, and you go, well, gosh, I don't know what real estate. You could do oil and gas. You could do like somebody who is you're going to be a passive investor in the beginning and kind of see how it works. You could do passive investing in real estate where they offer depreciation. Okay. And so let's say that your tax rate was 30%. Doesn't matter what it is. And we could use depreciation to get that tax down to 10%. So then you would have that 10% plus the 10% penalty, and you're paying 20% of what you take out of your 401k. So now, by the way, we don't advise you to do that or not advise you to do that. You have to make your own decision, because we don't give you that financial advice for the 401k, because technically you should have a Wall Street approved license to do that. Okay. And so we don't have that anymore, because I didn't want to do that anymore. You can't put an insurance policy in a self-directed IRA. If somebody tells you can do that, they're wrong. So they try to keep these things separate. Insurance contracts are non-qualified. Self-directed IRA, an IRA, Roth IRA, all of that is a qualified plan. Okay, so okay, somebody raised their hand, but I don't know. Did I not answer somebody's question? Okay, I don't really know how to work this. Sorry. So you can't do that. So, all right. So we'll wrap all of this up. Start slow if you got to start slow, right? Start small if you got to start small. But it's just it's a journey, and it's a fun journey, because you're learning as you go and you're getting better at it. just like when you're losing weight. Yeah, the first part seems, and here's the cruel thing about losing weight is you could lose a lot in the beginning and then maybe it's slow at the end, right? But as long as you're making progress, who cares, right? Who cares? If you're building your wealth and you're making progress, who cares? If you're building cash flow and it just gets bigger and bigger and bigger. Okay, so it's just making that progress. But Glenn, who's normally on here on Mondays, he took his 401k. Now he had more money in his 401k than most people. Yes. So he had a lot of money in his 401k, but in 3 to 5 years, he took that balance and he turned it into like $20,000 a month cash flow. Right. So he started, that's pretty fast. And he's going to be on his podcast will be released here in the next few weeks, but it's, yeah, Angela's right. Angela says it's a little scary at first because it's different. Staying present with this community is helpful to stay on track. Thank you. That's what it's here for, Angela, and thank you for that comment. But it is scary because everybody else is telling you to do something different. But that's like everybody saying, hey, just take that shot. I mean, I was watching TV today and they're talking about some new pill that's basically the same thing as the shot. And I'm like, we're getting more and more people on this shot. And their goal is to get the cost of it to where everybody would be on it. And the news anchor, I don't even remember what station it was, she said, well, so would you just take this pill for the rest of your life? And she said, and the doctor said, yes, that's what it's designed for. Now, this is the last thing I'm going to say because I've gone a little bit over our time, is you are the human trial in that thing. I mean, you are the human trial, and I don't want to be somebody's human trial. How'd that work out for other people? Some people, it did not work out well here in the last 5 years. Okay. We won't go down that rabbit hole. Not well. I mean, I think nobody could say you were better off doing it that rather than not doing it. I mean, that's not what I'm hearing from doctors. Anyway, so I know I've bounced around a little bit today, but hopefully that helps. And like something else in your life, for me, it's like getting healthy and like thinking of that, just making progress. That's how I think about my infinite banking system. I just want to make progress. Do I have the biggest infinite banking system of anybody I know? No, I have a billionaire client that is pretty amazing. And there's other people that have bigger infinite banking systems too. But mine's growing, and so is Angela's, and so are other people on this, Nathan, I mean, like Matt, I mean, I know those guys, their systems are growing, right? Everybody's is. It has to, if you use it. So yeah, that's our Monday message is let's use that information and let's go win Monday and let's win the week. And I'll help any of you in any way I can. And the community is here to help you. That's what it's all about. And we'll see you next week. Godspeed.